Climate change is the biggest risk to the world, but when you turn it around, if you're part of the solution, it makes it the biggest commercial opportunity.
This week, 2021 is the year that money grows on trees. Meet a new class of green billionaire, a look at the entrepreneurs that made their fortunes on transition and how investors can get in on the action.
Every major investment we make must go through an ESG screen, and specifically a climate change screen.
As the investment community vows to adopt ESG, who screens what's green?
There's a massive risk of greenwashing. And so we think investors will get wise to this. They'll start asking more questions this year.
And what 12,000 chief executives need to do for sustainable development. The head of the UN Global Compact says we need a post-pandemic reset.
Governments and policymakers must look at shaping this era of economic growth in a green fashion, and I think that's what's very important.
From Bloomberg's European headquarters in the City of London, I'm Anne-Marie Hodern, and this is Bloomberg Green. Going green isn't just good for the planet, it's good business. 2020 showed us that investing in climate-conscious companies means massive returns. And those seeing their personal wealth grow the most are the names behind businesses working to reduce emissions. It's a fairly new class of mega wealth. Here's a look at the green billionaires.
As the planet's climate crisis accelerates, the fastest growing fortunes in the world are now green, thanks to a new generation of tycoons amassing wealth in the clean energy boom. The 10 billionaires on Bloomberg Green's new ranking showcase the explosive growth of electric vehicles, batteries, and solar power. Although not every dollar in these fortunes is derived from climate-aligned businesses whose core products reduce greenhouse gas emissions, there's no dispute that the transformation heralded by these billionaires is well underway. Elon Musk, Tesla's chief executive officer, became the richest person on the planet earlier this year thanks to the company's surging stock price. Its Gigafactory 1 is the world's highest volume battery plant. CATL, the world's biggest maker of EV batteries, supplies car manufacturers, including Tesla, Toyota, BMW, and Volvo. Its lithium iron phosphate batteries were cheap enough to let Tesla trim the price of its Model 3 by almost 10% last year. LONGTI is the world's largest manufacturer of solar wafers. Established in 2000, the company supplies about a quarter of the world's solar wafers and modules. Wang Chuanfu set up BYD in 1995, and Warren Buffett's Berkshire Hathaway has owned a stake in the carmaker since 2008. The company is converting the city of Shenzhen's buses, taxis, and trucks to plug-in vehicles. Eve Energy is the fifth largest supplier to China's EV sector, with 5% market share, and counts Daimler, BMW, and Xiaopeng among its customers. It recently produced lithium-ion samples for an EV battery that can be charged in just 5 minutes. Founded by ex-Alibaba executive He Xiaopeng in 2014, Xiaopeng makes an EV sedan and SUV. The automaker provides free charging services at 670 stations across 100 Chinese cities. Pratt owns Georgia-based Pratt Industries, the world's largest privately held 100% recycled paper and packaging company. The company also runs clean energy plants to help power its mills. Backed by Chinese tech giant Tencent, NIO has surged eightfold in value since its initial public offering in September 2018. The EV maker plans to build a network of 500 power swap stations where people can change their car's battery rather than recharge it by the end of 2021. Wobbin developed his first wind turbine in the 1970s and set up Enercon in 1984. Although one of the world's largest companies in the sector, it has faced challenges in its home country, where delayed approvals for new wind farms damped sales. It appointed a new CEO in November to engineer a turnaround. Established in 2003, First Applied Material mainly produces films for solar panels. It makes more than half the world's ethylene vinyl acetate films, an essential component of solar panels that helps protect them from harsh weather.
Let's Let's bring in our wealth reporter tracking those green billions, Devin Pendleton, joining us now from New York. Devin, great to have you on the program. Let's start with the #1 name on the list. Not just the wealthiest out of the green billionaires, but the wealthiest individual in the world, period. What's the driver behind Elon Musk's wealth at the top of this list? Was just about the ferocious gain we've seen in Tesla?
It is. Tesla had an absolutely extraordinary 2020. It means the stock price was up 743%. Elon Musk is the biggest shareholder, so of course that sent his own personal net worth through the roof. He gained more than $150 billion last year. And last year he was ranked among our richest green billionaires. This year, I mean, he blew everybody out of the water.
Right. And now, of course, Bitcoin. And Tesla's success is why we're seeing these gains in these Chinese billionaires, isn't it?
It is. So much of it ties to Tesla. Tesla has done so well. The demand is just there. Demand is growing. They've been turning out more and more cars. So they've set these really ambitious goals for the cars they're going to produce, for the profit they're going to turn, and they keep hitting them, which is something that not a lot of people thought that they could do a couple years ago. And so the more cars that are on the road, of course, there's more demand for batteries, for these lithium batteries, which power the electric vehicles. And a lot of those electric vehicles are being made in China.
You look at the billionaires, but how do regular investors also make money and position themselves for green?
So a lot of these green billionaires, I mean, they have gained a lot of their money just through their own companies that they founded. Most of these companies on our list are publicly traded. So an investor can buy shares in those companies. And yes, they've had extraordinary rallies in recent times. So you could say that they're quite highly valued at this moment, but you think about the potential for these green technologies, you think about the demand, you think about the needs, you think about the net zero goals that so many of the world's biggest economies have set. I mean, there's no cap.
Wow, sky's the limit. Thanks to our wealth reporter, Devin Pendleton, for joining us. Coming up, why the green transition is both the greatest risk and the greatest opportunity for business. Former Bank of England Governor Mark Carney next. This is Bloomberg Green. Welcome back to Bloomberg Green. I'm Amory Hodern in London. Now let's get your green brief with Jennifer Zavazaja.
Here's the climate news you need to know this week. Energy giant Shell says its oil production has peaked and will now fall by 1% to 2% a year. It's laying out a plan to transition to cleaner energy with new targets for electric car charging and carbon capture. A deadly smog over India won't lift until March. That's according to a forecast by the Copernicus Climate Change Service. The toxic dust cloud has engulfed large swaths of the country since October. A new study by Harvard University shows some 2.5 million Indians die every year from air pollution. Jaguar is ditching the combustion engine. The luxury car brand plans to electrify its fleet in just 4 years. And its sister off-road brand, Land Rover, will follow suit with its first fully electric model in 2024. The carmaker's CEO says it has the technology and knows how to do it. And vegan with a sweet tooth? You're in luck. Nestle is planning its first entirely plant-based milk chocolate bar. The new Kit Kat V uses a rice formula as a substitute and took about 2 years to develop. The biggest challenge? Ensuring it blends well to get that creamy chocolate texture. And that's your Green Brief. I'm Jennifer Zavazaja in New York. Anne-Marie?
Now, often the conversation about climate is all about risk, but there's another side to that coin. Just as the green movement has made billionaires of entrepreneurs and companies set net zero targets, investors don't want to be left behind. So when it comes to capital allocation, Shonali Basak takes a look at why 2021 is set to be the year Wall Street really puts the E into ESG.
Environmental disasters are sweeping the globe. From wildfires ravaging places like California and Australia to worse weather all around us, an estimated 8,200 lives were lost due to climate-related events in 2020. The year of storms, fires, and floods collectively cost the world an estimated $210 billion in losses. The cost of climate change is rising. So when it comes to ESG issues, for investors and governments around the world, climate action has to be a key issue this year.
I think climate change is one of the biggest risks of our generation and the next generation. It's a massive issue for all of us, especially for what we do as long-term investors.
There's something more here than just a seasonal drift in the climate. We really need to have an honest discussion about a transition into a new future.
The world is getting hotter. 2020 was the second warmest on record. As corporations and governments rush to limit warming in the race to cut emissions to zero, it can't come fast enough for investors. Pensions are teaming up with each other and with governments to force change among companies.
It's this coordinated approach that will enable us to pick up the pace. Because if we're talking about net zero by 2050, we have got no time to hang about at all.
This year, the UN climate conference, COP26, will be hosted in one of the greenest cities in the world, aiming to force more world leaders to commit to ambitious targets to reduce emissions.
The event, which will be hosted in Glasgow, Scotland, will also have a significant focus on how financial services firms are contributing to the fight against global warming. Former Bank of England Governor Mark Carney, a leading figure in pushing the finance sector to consider the risks and opportunities posed by a warming planet, is spearheading efforts to make the conference a pivotal moment in the reshaping of finance for a net zero world. His goal is for climate risk to be put at the heart of every financial decision.
It helps that leaders across the UK, the EU, and the US have made it a key focus for change. And China, Japan, and South Korea have made net zero promises. There are many ways investors are getting involved, from a rising amount of investment in green bonds issued by companies looking to transition to a more sustainable future, to the billions that are being invested in renewable energy. Close to $3 trillion in investment has been made in the last decade alone. Investors are putting climate at the forefront of how they allocate their money, and it's happening at a greater scale.
It covers everything that we do. So it's top down and it's bottom up. So every major investment we make must go through an ESG screen, and specifically a climate change screen, to understand what the risks are and are we being paid for them.
As you heard there, one leading figure urging the finance community to put climate at the core of every single investment is former Bank of England Governor Mark Carney. He's also the head of ESG investing at Brookfield Asset Management. Now that he's in the private sector, he's looking to turning those climate risks into opportunities.
Climate change is the biggest risk to the world, but when you turn it around, if you're part of the solution, it makes it the biggest commercial opportunity in the world. In effect, we're going to rewire, so to speak, the entire global economy consistent with net zero. And I wanted to be at a place that could play a leading role, in fact, in many respects, a defining role in that.
Why did you take this on? What sort of generated that enthusiasm for you?
Yeah. After I got to the Bank of England, I shifted from thinking that others were going, I always knew this was a major issue, but you sort of think, well, that's an issue for others. Others are going to take care of it. Climate policy, the responsibility of governments or innovators to come up with the technologies. And then realizing that it just wasn't moving fast enough, and looking forward, as was my then responsibility as governor of the Bank of England, looking forward and saying, wait a minute, there's massive financial risk on the horizon. And it's going to end up being closer than we think in terms of not just the physical manifestations of climate change, which quite frankly were easy to see. The Bank of England, as you know, and many don't, oversees the world's fourth largest insurance industry. So we had direct sight on these physical risks. But really what we're seeing is the prospect of enormous stranded assets, potentially, if we transition, if we succeed. Success is failure for some companies in this world on climate change. Enormous stranded assets if we succeed. But wait a minute, if we don't, then the world's heading to 3 or 4 degrees. And the financial sector was just not oriented. So that's really was the crystallization for me.
As you look at what is in front of policymakers at this point, what advice do you give them?
to get, well, it's interesting. I think I think my main value add at Brookfield is really about this transition and how it cascades from the financial, what role do we play as Brookfield in delivering this transition, and what are the expectations of Brookfield's investors, its partners, such as those major asset owners, principally those major assets? What are their expectations? What do they need to deliver? What do their citizens ultimately deliver? And how do we get there using our expertise? So it's actually more, it's really that, as opposed to looking on the policy side.
Coming up, 12,000 companies have signed up for the UN sustainability goals, but how does the international community hold them accountable? More next. This is Bloomberg Green. Welcome back to Bloomberg Green. I'm Amory Hordern in London. Now, businesses are rushing to set net zero targets and figure out where in their supply chains they can cut emissions and find sustainable but lucrative solutions. And more than 12,000 companies have signed up to the UN Global Compact Sustainable Development Goals, or known as SDGs. And they range from climate action and sustainable finance to supporting human rights. But the latest report from the Global Compact says the world is not on track to achieve their 2030 goals. I caught up with CEO Sanda Ojiambo, and she says we need a full reset.
It's a really important time, I think, to reflect on how businesses have responded through the pandemic. For us at the Global Compact, it's been very interesting because we found that during this period, businesses are actually seeking out a lot more information about how to be sustainable, how to build resilient businesses, and how to strengthen their supply chains through the COVID pandemic. So what we've done with our companies is really look at how we can integrate what we call our 10 principles for responsible business into the way that they do business. And for us, that means looking at things such as human rights, labor rights, the environment and climate change. And it's just good to see businesses wanting to figure out how they can build resiliency and sustainability going forward. Of course, this doesn't take away from the fact that business has been severely impacted by the pandemic.
The goal is to reach these targets of the SDGs by 2030. Given the impact of the pandemic, do you think these businesses can actually reach that target?
I fully agree with you. At this point in time, the COVID pandemic has truly slowed down progress on the SDGs. What we do really need to do is have a full reset around what we call the decade of action, which is a call by the UN Secretary General to really build the momentum around the delivery of the SDGs. We believe that our businesses can truly work around a couple of key SDGs, such as the SDG on gender equality, the SDG on decent work and economic growth, certainly the SDG on climate action, where a lot of momentum has already built up.
There are still not basic energy needs in some of the developing world. How do you walk that line between wanting to bring clean energy to places, but also making sure that everyone has access to energy, period?
It's a delicate balance, but you see, organizations such as the Global Compact must be able to look at both sides of the coin. The advantage that developing economies have is that they can actually set themselves onto the path of green growth in a way that perhaps didn't exist for economies that are further ahead on this journey. So looking at things such as building in renewables into the way that you build your energy sources, looking more at climate adaptation, making sure that you can look at biodiversity issues as you plan forward for your business. I see it as a big opportunity for growth and for green growth. Governments and policymakers must look at shaping this era of economic growth in a green fashion. And I think that's what's very important.
What's the biggest push executives who have to personally endorse these SDGs, what's the biggest push they need to make in 2021?
For me, it's first that continued leadership shift and momentum. Second, then, is looking at what I think are some of the fundamental crises that we have right now. There's also the issue of inequality. And now increasingly, there's an issue looking at decent work, economic growth, people who are out of the job market. I think CEOs must train their eyes on those three huge challenges that are before us.
Governments can't do it alone. What do you see the split as between government policy and private corporations making changes?
No one entity can do it alone. Government can't do it alone. Business can't do it alone. The government needs to continue to be able to set the enabling environment through which business can prosper and deliver. I think there's a lot that needs to be done around financing for sustainable development, be done around policies, as we talked about, around energy, around climate. I think we need a multi-stakeholder approach. We've talked about looking at more international cooperation so that really some of these changes can happen at a global scale as well.
2020 was a decisive year for corporate sustainability, with more companies than ever making climate neutrality pledges. Now, the push got even more attention as a result, of course, of the coronavirus pandemic. Joining us now is Jonas Roos, head of sustainability research at Bloomberg NEF, to talk about what to watch out for in 2021 when it comes to sustainable finance. Jonas, now let's start with net zero commitments. It seemed almost every day companies were all trying to one-up each other with green pledges. Who is next to make a pledge?
Announcements are accelerating thanks to the pandemic, in fact, not despite of it. And that's because the pandemic has shown us how fragile our systems are, and it has really taught us the value of resiliency. And we all know climate change is the next big shock. Big tech came in first, and they still have some of the most ambitious targets. Banking has got involved, setting net zero financed emissions goals. And then in 2020, the story really was oil and gas companies coming into this in a big way. And the level of ambition may vary a lot between companies and between sectors. But what's clear is the pressure is on from investors and from consumers. And net zero has become this point of competition, just like product, just like price. And that's raising the bar very fast on climate ambition. Last year's gold standard is this year's kind of okay. And in particular, we think the mining and metals industry will start to really catch this bug in 2021.
So net zero is really becoming the norm in terms of corporations. We've also seen, Jonas, governments, companies, other groups raising a record $490 billion last year, selling green, social, sustainability bonds. Really an ESG gold rush. What are we likely to see when it comes to sustainable debt in 2021?
Yeah, so sustainable debt has been this rapidly growing opportunity, double-digit growth year on year, and it's a real sign that there is more demand for sustainable investment products than there is supply. And with that, with that happening, with that backdrop, despite the tough market conditions of the pandemic, this market has grown to $750 billion by 2020, 30% growth in 2020, 80% growth over the course of 2019, and we don't think that this is going to slow down. We think Biden will cause increased U.S. involvement in the market. Social bonds, which erupted as a result of the pandemic. New innovations will open up this market to new types of issuers. So sustainability-linked bonds in particular are something to watch for 2021. And finally, every bank that I'm talking to these days is setting up a sustainable finance debt capital markets team, or they already have one.
And what about finance flows? We've seen a lot of interest surrounding ESG ETFs, but investors are now really starting to question how much is this greenwashing that may be when you pull back the label. What's next for that environment with ESG ETFs?
Yeah, again, ESG ETFs are this visible sign that there is so much demand for sustainable investment products. And inflows in ESG ETFs have seen 205% compound annual growth from 2018. And most of that growth has really come in 2020 as there's been this flight of money towards ESG, towards more resilient investment. And there's been a response to that demand and our colleagues at Bloomberg Intelligence counted 330 new ESG ETFs launched in the first 3 quarters of 2020 alone. But the problem is, these funds don't really have any proper regulation or even voluntary standards for what qualifies for that ESG label. So there's a massive risk of greenwashing. They really need better accountability, formal reporting standards, and that will come. But the really important thing, specifically relevant here, is the EU's rules, the so-called taxonomy, which clearly defines what qualifies as green, and which from next year will require that funds disclose against this. There's no hiding from that, and that will really help with this greenwashing problem.
That's it for this week's edition, but keep the conversation going. Follow us all along at Climate. I'm Amber Hodern, and this is Bloomberg Green.